So the concept behind taxes is really popular, especially around tax season, but everybody wants to know how to avoid taxes, right? Now, when we think about avoiding taxes, essentially what we're saying is how do we pay as little taxes as possible? Now, this is a fine line because there is definitely some pros and cons to reducing your tax obligations. So I'm going to tell you exactly why I don't really live by the mantra of avoiding taxes. So first and foremost, we have to look at what the tax code or how it's kind of structured. And so basically we work on a marginal tax bracket system, which basically says if you make a certain amount of money between, this dollar point and this dollar point, well, then you're going to be taxed at this specific rate. But as soon as you earn a little bit more than that top dollar point and go to another range, then you're going to be taxed at a different rate. And so it's a kind of a complex tax system where it's not like, hey, every single dollar you earn is going to be taxed at 20%. There's all these different layers and combinations until we come out into your total tax obligation or your effective tax rate, which you're actually being taxed at. So when we look at avoiding, it really isn't as simple as, all right, well, let's just start spending more money. No. There's a lot more to it, right? There's other tax strategies such as the Augusta Rule or Section 179 if you have a company and you have a vehicle. We have child tax credits. We have all of these other things that we can take advantage of. Now, at the end of the day, nobody likes to pay Uncle Sam, but we have to look at it from two different perspectives here. One, if we are a W-2 employee, well then what's happening is our taxes are being taken out of our wages, right? So they're already sitting up at the IRS throughout the entire year, and at the end of the tax year, when we go and file, we either get a refund, right, saying, hey, look, you overpaid us, or you didn't pay us enough and now you owe us more. Now, if we're employers or self-employed, well, we have to pay the IRS. The IRS doesn't take anything from us, and so we have to pay it at the end of the year. And so now when we look at it from that perspective of, look, you're not taking it from us throughout the year. We have to pay it. When the end of the year comes and we get that tax bill, that truly is all tax. So the really wealthy or the real savvy business owners, they're finding a way to, at the end of the year, they don't pay anything or they pay very little. And they're not actually avoiding taxes at all. They're just following the tax law. And the law is, it's a large tax code, over 6,000 pages. Tons of different material in there, and ultimately the way that you interpret it or whoever can best interpret it is the one who's going to win the game, right? Understanding the rules of a game allows you to play it a little bit better. And when we hear the word avoid, oftentimes we think of like tax evasion. Like what are people are doing something kind of scammy or sleazy to get away from actually paying taxes, right? Or for example, it's not sleazy, but maybe moving to Puerto Rico to get a 4% tax rate. Right. Now that's a strategy that a lot of people have taken over the past, 4 or 5 years, and they find this as a way of avoiding taxes. And the law kind of dictates, hey, you have to live in Puerto Rico for more than half the year or something to that effect. And so you would see people actually traveling back and forth from wherever they live to Puerto Rico to spend 2 weeks in Puerto Rico a month. So they're getting that 51%. Lifetime over there. And when we look at that, when we look at all of the risks, all of the rigmarole, everything that we have to do to help avoid these taxes, playing these extra games, hiring all of these attorneys to do complex structures, get bank accounts over here and over there, what we end up doing for ourselves is creating a lot more work. And now we have to pay more people to help us structure the things that we need to structure in order to avoid these taxes. Now, if you got the money, you got the team, you got the structure to be able to do that, then by all means, go for it. People are doing that all the time. Obviously they're extremely wealthy, decamillionaires, billionaires, things of that nature. They have teams in place to help really structure all of that. What about the small business owner that doesn't necessarily have the capital at the time to be able to execute those things? Well, we have to also be aware that what happens to us when we don't reflect income. Now, again, if we have a W-2, things are fine, right? We have this steady income check. If we needed to go out and do something, get approved for a loan, buy a home, buy a car, whatever the case is, that W-2 can help us out. And as a small business owner, typically we're operating for ourselves or for our family. We might have a small team, maybe 10 to 20 people, give or take, and we may even be making somewhere around 10 to 20 million in revenue annually. And that's a great business. Nonetheless, it's a solid business. And depending on how we're running it, we still may be very reliant on the income that company generates in order to really sustain our current lifestyle. Right? The houses, the food, the private school for our kids, the college education, the whatever it is that you can imagine. And what happens is when we report a lower amount of income to the IRS, well, that doesn't look good to anybody, right? Nobody wants to see a business that's not producing money. Oh, nobody wants to give a loan to somebody who doesn't have the ability to pay it back, right? You can't even sell a company that's not really, well, pause, let me stop there. I was going to say you can't sell a company that's not producing income, but there's a lot of tech companies recently that have sold with reported losses. And so that's not neither here nor there. Anyway, you get my point. Like for a small business owner, if you're going to go out there and purchase a company, you want to know that the company can actually produce money, right? So when we start to play avoiding the taxes, we now play this game of how are we avoiding it? One, are we just trying to show no income and taking all the deductions in the world and we're, moving to Puerto Rico and setting up all these different bank accounts and getting these attorneys? Are we doing it that way? So it's structured very complex and costs a lot of money. Or are we doing it where maybe we're avoiding it illegally and we're doing tax evasion? Hey, let's not report a certain amount of income. I received cash here, but let's not report it. If you do it the first way, you should have a team in place and then you should be good to go. If you're doing it the second way, trying to avoid it, trying to be kind of sketchy about it, it's not worth it. It's not worth it because if you do get caught in that space, then the IRS can come and take back everything that you earned. They can garnish all of that stuff. Hey, you owe me taxes on all of this. You have jail time. You have additional penalties. They could take it all away from you, which we don't want at all. So now if we take both of those out of the equation, what we're left with is now the question of, all right, well, how much do we just write off, right? How do we just get our tax obligation as low as possible? And a lot of times you will hear this from some tax advisors, some CPAs, some tax preparers and things of that nature. They'll say you need to spend X amount of money in order to pay less in tax. Now, I got an issue. So we work really hard for our money. And yes, we do like to spend our money. That's, we earn it. We can do what we want with it. But to know that at the end of the year, one of the only options in order for me to save in taxes is to go out and spend money. Well, that makes it almost requiring a kind of like a knee-jerk reaction, if you will. Now, there's some people that might go out and really prepare and say, hey, over the next 5 years, every year, we need to spend this much money on these things. We're just going to wait till the end of the tax year to determine how much we can spend on those things. There's some people that prepare that way. But for the average person who's just going through the tax year and then all of a sudden at the end of the year, it's like, if you want to save $30,000 in taxes, you need to spend an extra $70,000. It's like, well, crap, what are we going to spend the $70,000 on? But then we just go out and we start to blow this money instead of having a strategy in place, having a plan in place of, okay, what can I do throughout the year that'll reduce the taxable income? What else can I do to reduce my taxable income that doesn't cause me to spend any money? And even after all of that, if I still have to spend money at the end of the year, what are some of the best items that I can spend on? That's a real tax plan. That's tax strategy. And so I don't like to play the game of avoiding taxes. I think avoiding taxes puts you, it pigeonholes you into a box that doesn't give you flexibility to go out and get loans, to go out and sell your company, to really do some of the things that you want to do. I think tax strategy is the way to go for it all. And so that's what I really focus on is how do we plug in all of these different pieces? How do we plug in filing married and separately or married jointly with child credits, with then carry that over here with the Augusta Rule and the depreciation from our assets? How do we put all of that together to allow us to earn, $300,000? After everything shakes out, we have $100,000 of taxable income. And then after we bring in some additional strategy, we actually reduce that taxable income to $30,000 or something of that effect. How do we play that game? And I think if more people were to focus on that strategy behind it, well, then we would keep more of the money that we make, which would allow us to invest that tax-free money into other vehicles and allow us to accumulate more wealth. So that was a little bit of a rant about why I specifically don't recommend you avoid paying taxes. I don't follow that mantra. And if any of you are looking for a tax strategy, specifically within the real estate space, real estate investing, brokerage, property management, and things of that nature, then you can absolutely reach out to me and the team over at G2 Business Solutions. We got our email down below. We got a scheduling link down there. We can walk you through all of that good stuff. But as always, thanks for watching, and we'll see you in the next video.